Everyone, welcome to the Modern Market. It's our daily show from Monday to Friday at 7 a.m. Eastern Time at 12 p.m. BST. Every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some and or a lot of money on the internet. I'm your host, B-Check. I'm joined by my legendary co-host, Sammy. And we're going to get into everything to do with the market in just a little bit. But before we do that, just a reminder, friends, that nothing that we say here is financial advice, because we don't know anything necessarily certainly about this market, because it's very, very risky and unpredictable. So please do proceed with caution and exercise your own judgment. With that out of the way, Sammy, it is Friday, finally. How are you doing? How are you feeling?
TGIF indeed. Yeah, it's good. Good to have the weekend fast approaching. I think it's quite nice just to actually have zero plans, and it's just quite nice to be able to settle, kind of catch up on the things I haven't necessarily had the time to in the week, and just kind of get back ahead on top of the research side of things. But how about you?
Nice. I am doing a bit of personal activities, and then didn't I say just before I had something? Oh, yeah, I've been doing some interesting professional stuff too, but I can't talk about that yet because it is confidential at this moment in time. Where are you going? What are you doing? What is your split between public and confidential?
As in my knowledge, as in
No,
insider knowledge
what are
versus.
you up to over the weekend? How much of your activities?
You mean
is public?
personal versus work stuff?
Yeah.
I think probably do a 50-50 split. Like, I think I need to get back to fitness, ACL reconstruction fairly recently. So that's been on the mend. So I just need to get on top of the physio and then, lock in.
So
even though it's summer, bit of a split.
So 0% of your weekend is confidential.
Zero confidentiality. Yeah,
Okay,
that's correct.
fair enough. Good to be transparent about the ACL reconstruction.
Maybe I'm too honest.
Talking about the physical health, I had acupuncture for the first time last week. I didn't know I was going to have acupuncture. I went to the osteopath, and she decided that one of the things that I would need to do there and then was have acupuncture. And I thought it was kind of good. I thought it was quite useful. Have you had it before?
I haven't. I've had cups, the cups that they put on your back and then they heat it up and then they pull it off and your back's like all like.
Yeah, that's what Tira just said in the YouTube comments. So is that painful?
No, it wasn't that painful. It's just like you can't. Well, if you go to the beach, it just looks weird. This was when I was in Australia, and you go to the beach quite a lot. So yeah, it's about a week of where I was like, I probably shouldn't go to the beach because it looks like I've just been beaten up.
Okay, I'm not opposed to that. Not opposed to that at all. If it's gonna have a good outcome, maybe I'll ask for that next time. But yeah, my first exploration into acupuncture went pretty well. I thought not bad at all. But we want to get into the markets away from physical health into the physical and digital markets. We're going to be talking a little bit about crypto, of course, or a lot about crypto, but also the proper markets as well, because we're going to be looking at Coinbase. Let's get into the price action first, though, before we hit the headlines from the snapshot, which is pinned up top if you are listening on Twitter. And but I'm sharing my screen if you are also watching on YouTube or on X video. So starting with Bitcoin, we are pretty much flat at about 64.7K. ETH is also pretty much flat, almost just a bit down a percent at 3.1K. And Solana is down almost 3%, down to $164. In terms of the headlines today, number one, Coinbase stock is up 2% as revenue increases to $1.45 billion, but trading volume falls 28%. We're going to get into that in a lot more detail a little later in the show. And I actually read some of the key documents from the earnings call yesterday, and there's some really interesting stuff in there, which has definitely not been reported on, and I will share that with you later. So that's what we'll do in just a little bit. Number two, Jupiter proposes a 30% token burn, which is pretty significant. The founder said that the reduction proposal is live. Obviously, it's governed by a DAO, so they have to propose this. And they want to propose a 30% reduction in total supply from 10 billion to 7 billion, including the team voluntarily cutting 30% from their assigned allocation. So that's pretty significant, given that we're in this universe where all these tokens are coming to market and all or the majority of them are losing a lot of value because they're low float, high FDV. This team are proposing to cut 30%. So we'll touch on that and get into the weeds a little bit in just a little bit. And finally, Michael Saylor announces MicroStrategy bought another 169 Bitcoin in July and filing registration for a new 2 billion at the market equity offering program. So Michael Saylor is not stopping. If you did watch his speech from the Bitcoin conference on YouTube, you will understand why. He actually split out your various options as a human if you were trying to accumulate BTC, and one of the options was like a normie, one was a BTC maxi, one was a double maxi, and he actually gave an option for being a triple maxi and explained what you might like to do if you are a triple maxi. And I think he's definitely taking his own advice in that respect. Some notable sales: Ripcash Justice, this cool piece of art which I'm showing on screen, notable for their work to do with security and surveillance, sold for 2.5 Bitcoin. So digital assets are not dead at all. Ordinals are not dead at all when it comes to like the finest of digital art. CryptoPunk cap selling for 26.5 ETH, although the CryptoPunk floor has been slipping a little bit more. I saw a sale at 22 ETH and 23 ETH. It was a quick flip of the punk that sold at 22 that happened in the last 24 hours. And the Sam Spratt Lucy edition sold for 5.5 ETH to very well-renowned collector Seed Phrase. Sammy, that is the headline. Those are the headlines. That's the price action. I want to head over to our NFT marketplace partner, Mintify, see what's going on over there. Is there anything that's catching your attention?
Yeah, I mean, there's a couple of things. I think the Matrix Cuckoo, so the token, the Fire token, I think is literally just been listed on a few exchanges today.
Okay.
So the downwards price action is kind of what you'd expect for the NFT. Obviously, yeah, token allocation, and then the NFT dumps post dividend effectively.
Gosh, this costs 1 ETH.
Yeah, these have been pretty expensive for some time. But yeah, it seems like a pretty good ecosystem. They've got quite a few kind of KOLs.
Is this a gaming one as well?
Yeah, exactly.
Wow.
So yeah, but I mean, 10% is not significant, or 13% on the chart. Like it's not a significant move for a token, because you've seen far worse, like 50, 80% drawdown. So unless it's not yet fully experiencing the downs yet, but
sure.
I think that went live in the past few hours. So we'll see how that plays out.
Okay.
But then the other one, the Artifact Animus, that's down 15% as well, which we saw that reveal. And it took 350 days, which we commented on the other day.
Yeah, that's a shame. We spoke about that yesterday. Obviously, Artifact taking a very long time with this. Their main project being the CloneX project. Also, like very far down based on the lofty heights they kind of got to quite some time ago. I'm just looking at the general market though, Sam. One thing we haven't really touched on in the last few days, although we're taking a look at this stuff and kind of picking out individual things, the general trend at the moment has been a little bit down as well, right? So Pudgy Penguins had been like very, very solid at above a 10 ETH floor, or maybe 10.5-ish, 10.7, 10.3, something like that. They've dipped down to 9.4. Bored Apes have kind of actually up a little bit back to 9.5, but I think they went below 9 for a period of time. Even Miladies, which were kind of solid above 5 for a period of time, have got dipped beneath now to 4.8, 4.9 or so. Azuki's underneath 4 at 3.8. So kind of a general trend downwards I'm seeing. Is there anything you've been thinking about in that respect? Are you noticing the same things on the collections you're looking at?
Yeah, well, I think, I mean, if you use Pudgy as an example, I think they were around about 80 before the Abstract acquisition announcement.
Okay.
So then that pumped up to what, 12, 13 ETH probably post announcement, and that's kind of retraced a little bit. But actually also the price of ETH was, I think it was higher then. So net, you're probably not far off in USD terms pre acquisition announcement, which, I don't know, in this market, it suggests that this bullish news that you kind of have coming through, it seems to be short-lived unless there's new announcements to sustain it. or unless the market shifts more generally. And I think if you look at the wider fungible token market, like even Bitcoin and everything's suffering, the Bitcoin Nashville seemed to be a sell the news event. So yeah, it's just interesting to see that kind of almost act as a ceiling for NFTs as well. Like until we see Bitcoin and the fungible tokens kind of rip new all-time highs, and I don't think we're necessarily going to see that kind of price action in NFTs as well.
Interesting stuff. Thinking about how you phrased that, I think you're probably correct in the end. Well, that's definitely one of the ways to look back now with the benefit of hindsight. Okay, fine, it was kind of a sell the news event, but I feel like there's so much else going on in terms of the political side on crypto that is definitely having an effect on the market at the moment. And this goes on to one of the discussion points that I wanted to talk about today. This tweet from Santiago talking about the political angle and how we are potentially way too focused on it in general. So yes, I agree with you. The event, in hindsight, looks like a sell the news event, but I think that in part to do with that is this uncertainty in the political landscape. But Santiago had this to say. Obviously, if you don't know Santiago, a very prominent investor in the space, said, "Think the market is too focused on election probabilities. Maybe there's a little bit of an angle to do with the other market. What's the prediction market called? Poly market. Getting confused with all the different protocols beginning with P now. Think the market is too focused on election probabilities, not enough focus on the bigger picture. ETFs approved in spite of reluctance to do so. Industry had to sue to get approval. Similarly, courts ruling in favor of many crypto cases. Seeing breakout apps like Polymarket become central in the conversation. Increased interest and adoption on chain. Yes, regulatory clarity is needed to attract more institutional flows. That is a big driver. That may take time, and the best we can do as an industry is to continue building killer products and services." That was the core thinking there. Sam, I wonder what your take is on this. Do you think there is validity in that? What's your thought?
Yeah, I mean, I think if you just pull up that chart from Polymarket, we might as well just talk to that whilst we've got it open. But the elections part, if you go down, you can see the presidential forecast by percentage. And I think when was it? Back in May, it was pretty much neck and neck for Biden. Then it became a clear split where Trump kind of took away and then Biden dropped off. On the sort of mid-July, Kamala Harris kind of popped up. And now we're like getting to the stage where it's at 54% versus 44%, which I guess there is concern that she may actually pit Trump to the presidential seat. So yeah, if you just scroll down a little bit more.
Yep.
So keep going down. So that chart there, that literally over time, you can see the runnings over time.
So just explain what we're looking at for the people who are just listening in.
Yeah, so it just basically shows the percentages, like the probability of winning over time. So you can see back in May, it was pretty much neck and neck between Trump and Biden. Then I guess the talk started happening, and Trump kind of took it away all the way up to around about over 70% mid-July, and Biden pretty much dropped out of the race. But then Kamala Harris took over. And that gap's now closed pretty much back to almost at parity. You got 54 to 44, and there's obviously some other candidates. But I guess that's market jitters, because you've got Trump, who's outwardly expressed his interest in crypto, and then historically the Democratic Party has been pretty much against crypto. So there is that concern, and I can see why people would get spooked by it.
Interesting. That's a very, very interesting chart. Thanks for bringing that up. If you can't see this, remember we're live on YouTube and live on video as well on X. But if you can't get to other places, this is the Polymarket chart, which kind of shows how you can track the odds over time and the historical odds at the same time. So that's pretty interesting to see. I saw another tweet which this made me think of, Sam, which was something like, was it a mistake to tie Bitcoin? And I don't know if anyone has intentionally done this. Is this the market doing this? Is this people in crypto doing this? Is it a mistake to tie Bitcoin to Trump in that respect and tie Bitcoin to Republicans? Like, there's this big debate, a debate that I'm seeing on the timeline at the moment. We're going to have to venture into the political, at least for a period of time, on this, I think, because there's this debate happening where the question is, to what extent should crypto, the broad umbrella of influential groups who represent crypto, should embrace or try to reach out to the Democrats, given that they have been kind of empowered during a period of time where they've been persecuted. I don't know if 100% when the Republicans were last in power, they were necessarily any better, but obviously the perception now is that Republicans equals good for crypto, Democrats equals bad, or at least that would have been the case under Biden. So the debate now is, okay, well, this is potentially a new person. I wouldn't necessarily say new administration, because maybe some of the team are the same. I don't know how that works out perfectly. But I saw a heated debate between Laura Shin, who runs the Unchained podcast, and obviously Ryan Selkis, who's completely down the line Republican. And maybe Laura, I don't know if Laura's Democratic or whether she's just more centrist, saying, look, it's a new person. Shouldn't we at least be reaching out to them and seeing, it'd be net good if whoever comes into play is going to be pro crypto. So I've taken a bit of time there to set up the general argument that I'm seeing that exists. I wonder if you want to share your thoughts on where that fight is going.
It's a touchy subject because I saw a similar thing with, I think Adam Cochran spoke about joining a group of people that are lobbying to effectively try and have an open communication or dialogue with the Democratic Party.
Sure.
Now, I'm not deep in the weeds for US politics, but I mean, dialogue can't be a bad thing. Like if you've got a new figurehead coming in, you want to be able to have that open communication. So to me, it kind of makes sense to try and do that, irrespective of the party. And I think also, we say that crypto is good, but for the Republican side of things, but actually we don't know that for certain. It could have been just used as a tool to try and get them into power and swing these votes from single issue voters. So I do think that there is an element of uncertainty that even if they do get into power, it's not necessarily net good. And these things can always change. Politics are politics. So I think it's a tough one. I think I definitely agree that lobbying the party, like the Democratic Party, is a good thing. I think it's obvious that crypto's been used to try and swing votes.
I mean, one thing I saw someone else tweet this, and I thought this was probably apt. The Democrats loved crypto when SBF was giving them loads and loads of money.
Right.
So there is a way. Look, I mean, one thing I was thinking, Funky, I definitely want to hear your thoughts on this in a second. And this is all just opinion, right? And we're going off, especially from people who are not even in the States. So bear that in mind. But I was just thinking, in the end, one of the biggest accusations people have against politicians is that they're all just paid for anyway, in a sense, in the US system, as well as in all the other systems, realistically. If you're a big enough donor, you can change people's opinions in the way that people are going to lobby, right? So you can lobby the people to do what you want. So in the end, just pay the people. I know they want to back people, they want to back the Republicans at the moment. That seems to be the consensus place that crypto money wants to back. But if it's not them, for whatever reason, just pay the other people. That seems to be the business. You don't hear people from Microsoft or the oil and gas industry. Once one of the fair enough, they might have their preference, but I'm sure, and maybe someone can correct me if I'm wrong, I'm sure that once the other people win, because that's how politics goes, sometimes it's Republicans, sometimes it's the left, sometimes it's the right. I'm sure that once the other people are in, they're not trying to torch the industry to the ground or torch the relationship to the ground. They'll find someone to pay in the new place. I don't know. That's just me observing it from the outside. Sam, you want to come back in that, and then I'll hear from Funky.
I also think surely the US can't be anti-tech. If they just can't, just to scare people offshore, it just doesn't make financial sense, long term. So I think we have this argument that by having this heavy regulation, you're going to scare everyone offshore. I just think that they just need time to come around to a point of view, or maybe they're trying to. They just can't. I can't imagine them being that stupid. So I do think that there is that point that like they just need a bit of time just to kind of formulate their plan and try and do that.
Maybe. I mean, the thing is, from what I've read, sometimes people can be that stupid. And there has been this rising anti-tech sentiment over a period of time in the States. And possibly just, again, when I say in the States, it probably correlates around the world, frankly. As tech has got more and more powerful, obviously there's a bunch of people who are being displaced as a consequence of that. In particular, the traditional media who don't like that their clicks are going down and other people's clicks are going up. So I think there is that sentiment. Some laws have kind of moved against tech in certain ways.
And that's what I mean. Like, it means that they obviously have an ulterior motive, and maybe it is an age thing where the old guard's kind of leaving and they don't want to change the status quo because they've got it pretty good. But naturally, that's going to shift over time anyway. You're going to have the new guard coming in, probably going to be a bit more tech savvy and actually benefits them in the population. So I think it will shift naturally over time, irrespective of party.
Yeah, I think that's probably fair. And maybe to Santiago's point, kind of going back to that, just need to stop focusing on this like specific election necessarily. Like the broader movement is kind of taking place. Tiro made a reasonable point. Let's just see what Kamala's stance on crypto is from her own mouth. Like, I guess people just don't know yet, and that uncertainty is what is creating the uncertainty. Funky, your hand was raised. Welcome to the stage, my friend. What are your thoughts on this? Do you think it is reasonable for people to be questioning whether we should be kind of reaching out to a party which has most recently been quite anti-crypto? Do you think it's reasonable, it's correct that the current crypto establishment, or at least some in the crypto establishment, is seeming tying crypto to the Republicans entirely?
Jim, Marta Bam. Yeah, I got lots to say on this whole topic. First and foremost, I wish that weren't the case. I really think that the best way forward is to frame this as a bipartisan issue that's good for America by trying to keep innovation here, so on and so forth. You look at Marathon, for instance, doing what they're doing, and just Bitcoin mining being kind of talked about in an energy kind of conservation way and everything else. But putting that aside, as a personal NPA, I've never belonged to a political party. I don't like either side. I feel like neither of them at this point, especially as polarized as we've become, serve the interest of the citizens of the United States by and large. I think you're spot on with saying that basically they're just all smiley, glad hands that are looking for money. And if you dangle a carrot in front of them, they will say whatever they need to get elected. So as a pragmatist, I feel like the best way is to, as you noted, donate to both parties. You look at the big banks, right? Like, look at the biggest banks in the world. They donate to both parties because they don't really care who wins. They just want to make sure that whoever is in there has gotten some money from them so that they can get whatever political favors they need, right? So it would be the same thing for the crypto industry. I am now personally on a journey doing some side stuff with the ARC blockchain ecosystem. And I've been visiting with legislators here in the state of Florida, and I always frame it as a bipartisan issue. This is something that's good for all Floridians by trying to introduce blockchain education to students at a young age and getting them to learn some of these skills that are going to be relevant in their future. So, and part of that work, ARC also belongs to the Blockchain Association, which is the largest advocacy group for crypto in the United States. You can look it up, blockchainassociation.org. I'll be going to DC in December with the CEO of ARC to actually interface with federal level legislators.
Nice.
So we are always going to go into these conversations with a bipartisan view that this is something that's good for everyone, not just simply one party or the other. That said, however, I also, having been a teacher for 20 years and just quote unquote, this when I'm talking about B-Check, know your audience, who exactly are you talking to? When I'm in a Republican office, I probably touch on points that are probably going to resound a bit more with Republican philosophy. If I'm in a Democrat's office and talking to that particular legislator, I'm going to focus on things that are going to resonate with a Democrat. That doesn't make it any less bipartisan with regard to trying to, get that regulatory clarity that we want in the United States. So I think just broadly speaking, personally, I feel it should be better framed as a bipartisan issue because the polarization in America is so incredibly terrible at this point that if we focus it on as being only a Republican thing, it's going to only hurt, I think, the broader appeal of crypto. I think if both pages, to your point that where Sammy was saying, just that as younger generations come into power, we're going to see this shift. And we've already started to see that with the letter that was issued to the DNC, where more of the moderate and younger Democrats are like, wait a minute, hold up. Maybe we should kind of pay attention to this crypto thing and maybe not be so, the Biden approach where they were just so caustic and trying to tear it all down and everything else. So I think having that conversation, and as someone else said, maybe it was Tiro, like let Harris say what her policy stance is going to be, right? Like it can't be, we just can't automatically. Now Selkis just had a thread, right? And there's this whole like deep state, whatever. Putting all that aside, you need to let the Democrats say something about what their stance is going to be as they're trying to win over and woo these voters to their side. But ultimately, as a nonpartisan, as an independent who kind of cynical about our political process at this point, and having voted since 1996, I'm going to be 49 this month. I'd rather it be focused as a bipartisan, good for America kind of thing. Rally behind the Coinbase story, for instance. It's an American company that's built on American soil. It's had an IPO. It's gone through all the processes to show that it's a legitimate company. Use that as the exemplar for what can be done in America. And the same thing for the mining companies that are here for Bitcoin, whether that's Marathon or Riot or what have you. Just promote pro-American policies that are going to help the overall market and the conditions legislatively and regulatorily in the United States. Sorry for the rant.
I love it, man. I really, I think it's awesome that you're kind of getting so involved and working on it from with a bipartisan lens. And I do think that is clearly the optimal solution. It is the optimal solution to try to work through it with a bipartisan view. I guess the barrier that people face when trying to reach that state is the sheer disbelief and I guess questioning whether the current administration are capable of being pro something when they've been so the other way. And to my maybe final reflection on this is, I think people have to, I don't know. I think that people can be optimistic, of course, be cynical, but maybe use that cynicism and be optimistic that these people can be bought in the same way that they've been kind of bought in other ways before. Like, I think if you come in and try to fund people in the appropriate ways, which is completely appropriate in that current system, whether you're the banks, the oil and gas lobby, whichever lobby, the crypto lobby now, like there's ways to push your agenda forward. And I think, we'll have to see how it goes. That's my final take on that. The reason why we're going into that maybe a little bit more than we would normally is because obviously we're trying to figure out what this means for our bags. And Bitcoin has, I think, genuinely been kind of become a little bit more trading a bit more with a bit more uncertainty in recent time. So I think that's part of the reason. We'll see whether that is able to decorrelate from the political process, and we will continue to monitor it as we go forward. Okay, let's get into the first headline for today, which is this Coinbase stuff. I'm going to share the screen for the people who are watching in. Coinbase came in with, here we go. Coinbase second quarter revenue beat Wall Street analysts estimates slightly as the industry continues to recover from the crypto winter, sending the crypto exchange's shares higher. This is coming from CoinDesk. Crypto exchange said its second quarter total revenue was 1.45 billion versus average estimate of about 1.4 billion. Those are like some of the headline numbers. On the negative side, however, and this is interesting to note, and I've actually got some very interesting information which I found in the earnings data specifically. But on the negative side, transaction fees, which slipped 27% from the previous quarter as trading volume fell 28%. So I thought that was interesting to note too. Prices responded just okay. It's up a little bit. I was just looking at the chart for Coinbase, to be honest, and I actually do own Coinbase stock, full disclosure. I don't own many stocks. It was just something that I bought a long time ago. This chart should actually show you what a situation we were in 2023 at the end of 2022. So for the people who are not watching in, Coinbase was trading as high as 200 something, almost, I think, above 300 at one point in 2021 during the bull market. The Coinbase stock traded at between $30 and $40 at one point in time, as low as that region, about 50, 60, something like that, and now is back up to 212. So when people talk about where we are in the market, gosh, Coinbase back up to like 216 now. That is a 4x from on like a publicly traded big stock. Sam, any reflections on this Coinbase news? And then I've got some more data to share from the earnings call.
Yeah, I mean, I think it's still fairly correlated to Bitcoin, because what were the lows on Bitcoin? 15K. Multiply that by 5, and you've pretty much got parity in terms of the multiple and stock price for Coinbase. So I think it's still very, for obvious reasons, I think it's still very much correlated. So it's kind of like the equities, people who buy stocks, it's kind of how they got exposure to crypto without having to go through the ETFs before they were a thing. But yeah, I found typically, because the main fee driver was the volume, so the fees on the volume traded, but because that had dropped, that did get me wondering, and I was like, okay, well, what are these subscription services? Because I hadn't really come across it before. So I started having a look at those, and I found that quite interesting, where it's like fee-free trading, which I think Binance's equivalent is if you hold the token, the BNB token, you get like a discounted fees, but you can just pay for a subscription to get fee-free trading, priority support, account protection, infrastructure services. And obviously people must be paying for it because that side of things has gone up. So I just found that quite interesting, that they're kind of trying to move away from reliance on trading volume for their fees. And it seems to be doing okay.
Yeah, that is very interesting. I wanted to share a bit more information or some interesting details that I found in the second quarter 2024 analyst Q&A call. I've got a transcript of it here. This is the kind of stuff that's outside of the main document, which they share, I think. And I was just reading through it earlier today, trying to find any interesting details. And I thought there were some interesting questions from some of the investors. One, I've got a couple to share with you all. Which one did I want to start with? The first one was to do with M&A activity. They said they've got no particular change in their kind of strategy in terms of M&A. The second one was to do with base transactions. The question was, it's great to see in terms of increasing the usability, scalability, and transaction fees on base this quarter, but can we revisit the economics on base transactions after this recent reduction in the average transaction fee? That would be helpful. Thank you. So the CFO said, we're lowering the transaction fees on base, which we've got down to roughly a penny per transaction, because we believe that fast, cheap transactions will grow the utility and the volume. What's important about this recent upgrade, though, is it actually increased the margin that we have on base. And so these are actually, while lower total volume, higher margin transactions to us. Early days, as we've said, in terms of what we think the opportunity is for base. And as we said, our key focus is on driving developer activity on the platform. We've spoken about this before often, and I'm very keen to see what they say more about base, because these L2s are an absolute money printer for these companies at the moment. I wouldn't be surprised they want to keep it relatively quiet in official stuff so that other people don't catch on, although I'm pretty sure everyone's already realized. The other interesting thing, which I thought was pretty cool, or it's just something which I didn't know, and this is maybe from a marketing perspective or, kind of interesting in general, is they asked about USDC. So one of the investors said, could we revisit your relationship here with Circle? You know how we've spoken a little bit about how USDT, we were literally talking yesterday when Tether came out and said that they made $5 billion in the first half. People are always fudding Tether. And I raise the question always, like, is this just because it's not American, frankly? Like, is it because it's not American? And this is an interesting point on the commercial relationship between USDC and Coinbase. The question was this. Obviously, there is some promotion and investment spend going into promoting USDC relative to the interest rate environment, which could be changing. What's the strategic view here and the payback relative to your investment in Coinbase, given where we sit in the market today? So the CFO replied, we are a distributor of USDC, and we have a commercial arrangement with Circle under which we get paid for the relationship that we have with USDC. Our view is that USDC can be the most globally compliant stablecoin and be a key underpinning of our vision of crypto utility. We are working to integrate USDC deeply in our product platform. It is the main base trading pair with our international exchange for derivatives. We have reward payments, blah, 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 blah. You know, they love USDC because they're getting paid to love USDC. That I found pretty interesting because I just didn't know that. Maybe that was obvious to other people. I didn't know that that was how this worked, but there is a commercial relationship between Circle and Coinbase. Funky, your hand is raised. Want to go to Sammy in just a second too. I know you have big thoughts on Coinbase. Maybe you wanted to speak to this USDC relationship.
Yeah, the USDC relationship is just one part of the equation in terms of why I am, to borrow Brett's phrase of quote unquote omega long on coin. There's just so many, like, I think people get so focused, and this is true of all their earnings reports, especially in the bear market. People would just always panic, like, oh my gosh, their revenues are down. But I don't think people see the big picture when it comes to coin because of things like the relationship with Circle, for instance, which I like back in 2020 or 21, I said to somebody in a trading room, I think USDC will become the de facto like US stable coin. I don't think there'll ever be a CBDC in America because I feel like they already have these rails in place with USDC. Why would you recreate the wheel when you can just do something? And there's already kind of permissioned things about USDC that are kind of scary, where they could freeze your assets and all this other stuff. But putting that aside, I think beyond that, the one thing I would just keep pounding the table about is how many digital assets Coinbase custodies. They're custodying BlackRock's Bitcoin. They already own 5% of the Bitcoin supply or something crazy, or maybe that's between all the ETFs, but the other big ones too. And I think they're also going to custody 8 of the 9 ETH ETFs.
Yeah.
So all of those things, even if the VIG is tiny, even if it's like 0.15% or whatever their fee is, at scale, when you're talking about billions and eventually one day trillions of digital assets, coin is going to be an absolute monster. So I feel like this is why sometimes people focus on some of this granularity rather than looking at the whole thing holistically. And that's not even counting the Coinbase cloud, which is running on many big chains. They're validating their face off on tons of these proof of stake networks, and they're absolutely crushing it. There just must be a revenue making engine for them because they don't have, Base is going to be their baby. They don't really care about validating on Polkadot or Atom or any of these others where Coinbase Cloud is one of the top validators. And they're just many of these proof of stake systems are cash generating machines. So I think big picture, this is why I'm personally so bullish on coin. Admittedly, I only got back in at like $50 because I was kind of like, oh, am I going to catch the falling knife?
Not bad.
Looking
man.
back, I wish I had gotten in at 35 and bought even more than I bought, but still, it's just, I feel like I'm a very big picture minded person when it comes to long-term investment theses. And this is for coin. I think it's established so much dominance in the United States. Now, if it just it's granted, I know it's small compared to Binance. I'll give it that. But
sure,
I think all these other pieces that they have is just really going to lead to a very prosperous future for the coin company, like Coinbase itself, and then the stock owners themselves.
I like it, man. Great thesis laid out there by Funky. Just to your point, Funky, about how it's kind of getting intertwined on a very deep, almost governmental level. And then I want to hear Sam's thoughts on this and everything we've been discussing about as it relates to Coinbase. The document goes on to say, as Brian shared in his opening comments, we now think we are developing the building blocks that stitch together Base with USDC, with smart wallets, with MiCA compliance, which is the European legislation in order to be compliant that we mentioned. So the picture they're painting here is like Base is involved in USDC. It's involved in smart wallets. It's involved in, like, embedded in with the MiCA compliance. They say this creates a foundation where we think we can really move to the utility phase of crypto. And so this partnership with Circle, the key issuer here, we think is a critical one to drive compliance. This is the name of the game, to be compliant in as many places as possible. And they seem to be very strategically well placed to do that. As you said, Funky is a coin holder. I'm a coin holder as well. Maybe not from a as glorious position as when Funky got in, but this was in the news today, and I thought that was pretty interesting details to share. Sam, definitely want to hear your thoughts on this. What are your thoughts on either the Circle relationship or anything else we've just been talking about?
I think the Circle relationship is really interesting. Issuing recently, which I think you've got in the snapshot later, EURC, so USDC equivalent in Europe. And I think the biggest issue being British, like I take payment in stable coins, I deal in stable coins, but a lot of the time I'm open to that FX risk. And if you're dealing with small sums of money, it's not a big issue. But when you're dealing with like billions and trillions, like that can become quite a sizable amount of money. So I think that the US assets under management for banks is around about, I think it's 23 trillion. There's a quote that I saw, but actually in Europe you've got close to 40 trillion. So if you're looking to kind of become like getting all these financial institutions to be doing things on chain similar to BlackRock, they're going to want stable coins, and they're going to want stable coins in their national currency, and that's going to be euros. So having EURC, like a stable coin that's MiCA compliant, is going to be an incredibly valuable tool for the USDC, so Circle issuer. But also I think that's probably going to benefit the relationship with Coinbase when they kind of push out into Europe as well.
Yeah, I like that thinking, tying it into the EURC news as well. I remember when I asked a question to the timeline a couple of weeks ago, just like if you wanted to like, what's the bet to place? If you thought there's just going to be more stablecoin, well, it's more stable coins in the world in the future. Like, what's the bet to place? Like, where do you put your money if you want to bet on that outcome? And the main responses were Circle stock, like they haven't IPO'd yet, but you either, you go long on Circle. Coinbase stock, I guess because of this deep relationship and being so intertwined with all of it. And then finally Bitcoin, because if there's more stable coins, the people who issue the stable coins, like Tether, make so much damn money because they don't have to give you any interest that they'll just go and buy Bitcoin with it. So those are the three options that I thought were interesting. And yeah, glad we got to bring that to everyone's attention. Hope that was an interesting conversation. Look, we got two more headlines to get through today. One of them we'll deal with faster than the other. But before we do that, let's hit the Web3 roundup to get you up to speed with everything else that's been happening in the last 24 hours. I'm going to share it on the screen for people who are watching in. We're live on X, live on YouTube as well, if you want to watch on video. Number one, Morpho announces $50 million raise for DeFi lending. This is one that I see the timeline be a bit quieter on, but I was aware of it some time ago. I think I'm providing a little bit of liquidity there, backed by some very significant people. Number two, Circle launches Euros stablecoin on Base with zero transfer fees. That's exactly what Sammy just mentioned. Next, Binance Labs backs Particle Network with $25 million to reduce fragmentation and unify liquidity across chains. OKX and Aptos announce a $10 million growth fund. That sounds pretty good. Might check that out. Next, on the more creative side, Deca launches customizable NFT collector pages. We had founder Bonafide Han come and speak with us the other day from Deca. That's pretty cool. Number two, Rec Drinks announces drank points for completing quests and purchasing Rec Drinks. I'm definitely going to buy some drinks and earn some points from Ovi's brand. And finally, Scottie Pippen's token dumped. This is not a funny story for the people involved. Scottie Pippen's token dumped by Deployer Wallet, over 330K in one clip. Pretty outrageous from another celebrity entering the space. I think for the third time. I don't know. I don't want to botch that number, but I've got a feeling it's the second or third time they've done that. So not great on the celebrity side, but we've got a better celebrity to give a little breakdown on now. Michael Saylor has been back at it again, buying more Bitcoin and proposing to buy a lot more. Sammy, I think you're going to explain what he's up to.
Yeah, so he's kind of looking to raise capital, so $2 billion worth of at the market equity offering. which effectively means that it's incremental issuing of the share at the current market price. So it doesn't dilute existing shareholders. But I think you got to remember that a lot of the Bitcoin that they bought previously has been through debt offering. And I think, what are the numbers here? So they've got a total debt of around 3.6 billion, and only equity of about 2.4, which puts a debt to equity ratio of 148%. So like there's only so much debt you can continue to raise before that ratio gets out of control. So I think this is me reading between the lines, but he's effectively issuing equity to try and balance that out over time. Now, if he was to raise another 2 billion, that would put his equity at around about 4.4, which would put the ratio at around about 81%. So actually that's a more healthy ratio, where he can then use that capital raise, so the equity, to then buy more Bitcoin, pay for operating expenses, or reduce the amount of debt that they have to then reduce the interest expense they have. So to me, it's a strategic move to try and manage the risk of the business, to make it more long term. That's kind of the TLDR.
Nice. We like hearing when Saylor is buying more Bitcoin. And again, if you haven't watched his speech from the Bitcoin conference over the weekend, I'd recommend it, purely just for how entertainingly bullish it was, but also probably some nuggets of wisdom in there as well. Final headline for the day is the Jupiter news. So what Jupiter have proposed, obviously Jupiter being the biggest Solana DEX, they've kind of proposed this 30% token burn. I'm going to share the screen for the people who are watching in and go to the proposal itself. So the founder proposed to burn 30% of the Jupiter supply from the team allocation. If past 3 billion Jupiter, worth over $2.8 billion at current market price, will be burnt. So this is the proposal itself. I'm showing this from the Jupiter kind of proposal website. It's just loading. Here we go. What they want to do for the first vote, this is the first of 3 proposals actually. And for the first vote, we propose a 30% reduction in token supply from 10 billion to 7 billion. It's going to follow this 50-50 principle, which means the team manages 50% and the other 50% is earmarked for the community, and 1.5 billion will be burned from both portions. So it's not purely the team's section that's getting burned. It's like it's a 50-50 split. And I think that's basically the core thing. I'm just checking the summary if there's anything else. For the first vote, yeah, team will voluntarily cut 30% from their assigned allocation, corresponding 30% reduction in Jupuary emissions. Remember, this is one of the sleeper things. I actually made a note to stay active on Jupiter because remember, their airdrop was one of the most valuable ones on Solana back in January, and that will happen again in this January. And we're getting to the point in time in the year where that's not that far away. So there will be another airdrop for Jupiter participants, whether that's on the trading side, maybe even on the governance side too. So stay active on Jupiter. Sam, what do you think of this move? This is pretty damn bold, to be honest. Like 30% is a lot. What do you think of this?
Yeah, I was surprised it didn't really move the price as much as well. It's kind of the price has dipped a little bit. I mean, it's had a pretty decent run up for the past like 2-3 weeks. I think it's gone from 80 cents all the way up to 120. So yeah, almost 50% pump, and then it's kind of come off a little bit. So I don't know like whether that was kind of planned. And we spoke about whether businesses, they end up forecasting this and announcing it well in advance, and then it goes through like a lobbying process before it's actually put on there. So maybe that was all priced in already. But to me, burning that amount of supply, you'd effectively assume that that's going to have a positive impact on the price, but it just doesn't seem to have been the case, unless maybe just people aren't aware of it.
Well, I guess I don't know for sure, but this is obviously what the founder and team are proposing, but ultimately this is a DAO, so it's been proposed and people will need to vote on it. So,
okay, so it's not been approved yet. Okay.
No, so it's announced, but people will need to vote it through because it's a DAO. So maybe once people get the sense that, right, this has got the votes from the various people. I don't know who the Jupiter whales are. Maybe that.
I think Legendary was one of those.
maybe we have to check in on him. Maybe that's why he's not around. He's working on this proposal. Yeah. So I think that's that. Maybe the price impact happens when the votes seem to be in the bag. I think it's an interesting dynamic for when you're thinking about price action, where announcements typically will kind of instigate price action 9 times out of 10. But when there's DAOs involved, you're going to have to monitor the governance in order to know if the thing that you think is bullish is actually going to go through or not.
Well, it's similar with the election, right? Like as Kamala Harris is becoming more apparent that it could be a potential threat, the Bitcoin price starts to come down. So yeah, I don't know. I get your point. It's very
it's just an interesting dynamic on some level, because now you're going to have to go check these governance proposal pages, which are historically not well visited and actually quite difficult to navigate. So if you want to know if this proposal is going to go through because you think you want to go long on Jupiter, if it's going to go through, you're going to have to go and do that. Maybe even buy some Jupiter and vote for it. So that's an interesting component too, right?
Maybe even check Polymarket and see if there's a thing on there. Will this proposal go through? What's the odds on it? And if there's not, try and raise one, get some volume on it, and then arb the market.
I mean, that's an interesting dynamic on whether or not certain proposals will go through. I wonder if you'd attract enough liquidity for those. A very interesting idea. Final question on this, Sam, before we close out, because we're running towards the end of the show. I think this is an important one. Like in terms of implications for other tokens and other DAOs, which, we've spoken about this before. So many teams are coming to market now. So there are more tokens than ever. Lots of them are low float, high FDV. This on some level is one of those, and this is a response to that, right? Like trying to bring the float and the FDV like closer together. Do you think that this will be the inevitable outcome for a variety of people? Will they feel like they have to do this type of burn on this scale? Remember, burns are not entirely uncommon, right? Like people have like routine buyback and burn. Sometimes this approach is more just like, let's just do it all in one go, in one big way. Any preference or thoughts on how people should go about that?
Yeah, I mean, it's not a new thing. Like if you look in equities, you've got stock buybacks.
Yeah.
And there's ways of managing that supply to try and manage the asset price. And I think that's just playing out here. And I completely agree with you that the sheer number of tokens that were launched at that kind of level with the amount of tokens that are vesting, unless they do something, it's just going to be priced down only as more supply comes on. So I think we'll see a lot more of this.
Okay. Interesting stuff. We'll obviously keep a tab on that as we move forward. But guys, that is the end of today's show. That is the end of this week's set of shows. We hope you enjoyed. Thank you so much for joining. Thanks to my legendary co-host Sammy for being here as always. Thank you to our contributors up on stage, Tiro and Funky, and those in the YouTube comments being super active. We appreciate you. And thank you so much for joining in the audience. We hope you have a wonderful weekend. We'll be back on Monday as usual. Take care. Have a good one. We'll see you on the other side. Bye-bye.